So, hello, and a massive hello to everybody. How's everybody doing? Hope everybody's having a great day. This is 50 Pips, rocking and rolling, 5th of February, 2017. No trade calls, no recommendations of response for those stuff. We're here for educational purpose only. So, again, let's get this party started. So, again, feeling a little bit uninspired, really. Not an awful lot is going on. I mean, in terms of the week that's coming in next week, I mean, we've got some, call it central bank week. It's going to be interesting. We've got the RBA on deck, so it's going to be interesting. We've got some medium importance data across the board. It's going to be interesting to see what comes out of Brexit, and we've also got the RBNZ on Wednesday, so that's going to be fairly interesting. So really, it's all about the commodity currencies and seeing how those play out. And again, we'll have to see what Trump is doing, any tweets, whatever may come. So it's a little bit tricky. I mean, not an awful lot is happening. I mean, as far as we're concerned, following last week, before the open, we said the only way you could really go into it, as far as we're concerned, is short stocks, long bonds, long gold. And that played out. Then we had a reversal towards the back end of the week, which kind of threw a little bit of a wrench in the spanner. But again, it's that's the way things go. We'll have to wait and see how these things play out. There's no big change. The equities, they look like they want to go higher, and they look like if they have to fail, they're going to have to fail from a higher level. But having said that, the way things are going on with the what the market is pricing in out of the Trump administration, with the geopolitical risk, with what Iran, all these things going on, we still feel a lot more comfortable going into the weekends, short stocks, long bonds, long gold. And that's probably something that's not going to change for the foreseeable future, with also, core short GPB positions. But, we'll have to see. You see here what's happening on the, SPY. We had this little gap up, gap down, and now we've ripped right back up. And it's just a question of follow through, right? And it's a very, very similar dynamic that we've seen across the board. We've got gold trying to press a little bit higher, right? Trying to trigger a little bit more upside. The week is going to be fairly interesting to see what happens there. We're pressing here. Actually, let's get on the GC here. Yeah. So you see, we're talking about these buys into the end of last year, and here we're at a key point. We've based off this 50. We're hovering around this 100. This is going to be a bull bear line. If we can close above here, then we think there's more room to squeeze, more room to correct up into this 1260, 1280. If not, looking back down towards that 1200. But we'd expect some kind of bid tone to still materialize here. It's really all about the all about the dollar index, right? And you see what's going on. We've talked about this an awful lot, that the way this is trading, let's get on a weekly. What the hell's happened here? Oh, there you go. So back on a weekly, we're at a key inflection point, right? And as long as we held above this breakup zone, then there was a chance to move higher. But we felt that, going into the beginning of the year, we'd get that 100 before the 105s. So that materialized here. As long as everybody's being caught a little bit off guard, positioned long, right? And we've taken out these lows. As long as we hold below this level, then there's a bigger room for a correction, on the cards. That means we can move back into this 98. 97, we've talked about that. We suspect bids to come back in here and then to try and rotate higher with this level, call it the 100, continuing to be the pivotal zone. But it's very tricky, right? In terms of policy, you'd expect that to be dollar supportive. But if the Fed doesn't deliver, if Trump and company try and talk down the dollar, you can get an aggressive move. And that's kind of the limbo everybody's fighting here, right? Trying to understand what the next move. The market has priced in the rate hikes. The market has priced in the kind of the stimulative policies out of Trump administration. So we have to see, are we going to deliver or not? And that's why it's tricky to do these updates, because not a lot is going on, right? We said we were going to look at the currencies a little bit more, because it's been a while where we looked at currencies, and not much has changed. On euro, this is our base case from last year, right? We didn't understand why anybody would want to get aggressively short euro. We thought the path of least resistance, especially with this bottom that was forming all these wicks, was to have a correction. Now, nobody has a crystal ball, so we just looked at different kind of corrections. A healthy minimum correction would be back into these moving averages. We could get a little bit of a higher correction back into this break zone. And if the data started to confirm and we really got a massive rip on euro, well, then there's no reason why we couldn't move back all the way into the 120 mark, right? So right now the correction is in play. If we look at it through, let's look at it at a shorter term time frame here. Let's just get on a different feed so we get something which is a little bit clearer, and let's get rid of some of these moving averages. You see that these wicks are really guiding, right? You've got this pretty much this 108, right? It's going to be a bull bear line, and then you've got, you know, these spikes up here above the 112, right? That was being protected. So I think here, as long as the market can cap this, you could see a little bit more downside, even if that is corrective, right, for ultimately a move higher. But if we start to take these highs out, then I think the squeeze back into that 112 could be quite aggressive. Now, if we take those out, if we take out these spike highs, then all these levels will come into play quite aggressively, and we'll have to see how those inflation figures continue to do in Europe. But right now, I think here the bull bear line going into the week on a naked chart is quite pure, right? You can see you've got all these wicks, and these are likely going to be levels that attract if we can get more upside. But keep in mind that these are all being zones that have been sold into quite aggressively. But you see the way the market is holding bid into all this sell area, you know, you'd suspect that even if it goes lower, it's pretty much intent on trying to take that level out and trying to move a little bit higher, right? So that's what we're looking at euro. If you're looking at, you know, CAD, that's another interesting one. A lot of people talking about CAD. And I think here we suspect that you've got, you know, we'll have to see what happens on crude. Everybody's positioned uber bullish on crude. And I think the room there is for some kind of disappointment. So we've got a lot of data out of Canada too. And here, if you look at this, even here on the weekly, right, it's trying to hold this level. If it doesn't, you know, you'd suspect the correction to come, and the correction could be quite aggressive. And here, there's a lot of places this could rally and still get sold into. But we'd suspect that crude and the data coming out will probably be the main driver here. And if you look at the other chart, we had this on another feed that we discussed this on the IDC feed. On the weekly here, I don't know why this isn't playing. Let's try and reset the chart. Let's see if this plays out. That's really, oh, sorry, USD. That's not going to work, is it? USD CAD. There we go. That's what we want. USD CAD, there we go. If you look at it on the weekly, right, we discussed the fact that it was stuck here. Now, in terms of levels, we'd be looking at it in terms of, broadly speaking, this 130 here is trying to hold, right? And you've got this 133 trying to cap, and this is a bit of a zone that's being offered very aggressively. Now, if this level goes from a closing basis, then the 128 is likely going to come into play quite quickly, and that'll be a key zone. So don't be surprised if you see that trying to get some traction, right, to the downside, especially on data or on a strong move in crude. But if we don't get that, then we think here, you know, sooner or later, you know, the path is for a little bit of a pop, a little bit of a surprise. But again, a lot of choppy trading in this area, and that's pretty much materializes across the board. Even if you look at the other commodity currencies, right? Aussie, Kiwi, the big question is, are the central banks going to try and talk them down or not? Here, it's holding bid, you know, and I think a lot of this is just, you know, unwinds of trades and people getting caught off guard on the dollar. Of course, with gold rallying, you know, this is going to have a good time trying to stay bid. So here, you know, you've got a lot of offers that have been trying to cap here. And the question is, what happens if we take those out? Well, we think that 80 mark is going to be a key zone. Now, if we start to get data which is not that good, if the central bank tries to talk it down, we wouldn't be surprised to see a slap down here all the way right back into this 174. But right here, again, as much as probably this update may be uninteresting, is I think it's a tricky one, right? I think here, in terms of location, is probably more interesting in terms of risk reward to sell. But the fact that it's been holding so bid, you know, you probably want to be a little bit cautious about the sells, right? And it's the same thing that if you look at it on Kiwi, it's holding bid. Now, it's holding bid into this huge, you know, these huge areas that have been sold. And there are a lot of stops to be clipped if we can get some upside. So it all boils down to really, is what's going to happen on the dollar, right? That's the big question. It all boils down to what's going to happen on the dollar. Is it going to catch a bid or not? And here, if it pukes, right, comes right back down. And keep in mind, it's all a corrective move, right? Then you'd probably expect Aussie to take those highs out, Kiwi to take those highs out, Euro to take those highs out, right? If not, if this bids, then it'll probably get sold at those zones. It's pretty much all the it's the same chart across the board. The only one which is slightly different in terms of in terms of the way it's trading, and we think in terms of risk is the way cable is trading, right? And we still think that there's an awful lot of room for disappointment here. And as we discussed the other day, if we're going to go back and complete those targets all the way into the 116s, this seemed to be a fairly interesting sell zone, right? Starting here, when we started to get these negative closes, we felt that the risk reward holding day stops above the 128 was particularly interesting. It got higher, but even here, we're talking about 2% risk to the upside and a very nice move to the downside if this is going to continue. So again, we feel this is probably one of the most interesting charts out there in terms of positioning ourselves for a swing. On the currency side, much clearer than the other ones. And here, what we would be looking at is this 124 as a main bull bear line from a closing basis. If that lets go from a day basis, we'd expect the downside to come fairly quickly, 122s, 120s to come into play. So that's the way we're looking at things. I wish I could make it a lot more interesting. Next time, probably get my tap dancing shoes out. I don't know, sing a little song, but that's where we are, right? That's where we are, and that's reflected on the equity side. You can even look at IWM, small caps. The way this is trading, they're still stuck, right? Everything's stuck. We need to get some kind of faux pas out of Trump. We need to get something escalating in terms of geopolitical risk. We need to get some strong data point. We have to have some central bank do something, because for now, it's just a game of wait and see, right? So I hope everybody has an awesome week. I think it'll be interesting. Again, just in terms of, in case it's confusing, right? All the positions we talk about, those are positions we discuss and trades we take live in the daily webinar. So it's not like we're making stuff up. Everything's done live. So if you're ever interested, you could always hop into one of those, sign up for those and get it real time. So again, thank you so much for liking. Thank you so much for sharing. Again, I hope the sound is better. I hope it's not going to be distorted. I did a little test. It sounded better. I jacked everything up. So I hope this helps. And for some of you guys asking, if I talk too quickly, you can always go on the settings on YouTube and slow the speed down, or you can even put subtitles on. So they're fairly good, I think. So hope that helps. Have an awesome one. Thank you so much. Talk to you guys soon. Bye-bye, guys.